Thank you very much for joining me today, this September the 5th. It's about 5 p.m. here in Istanbul, Turkey. My name is Phil, short for Philakone, and I've been in the crypto space for 7 years now as a day trader, scalper, and a hodler. I left my engineering job behind because I had the opportunity to invest in Ethereum, where it went to a really high price in 2017 that allowed me the freedom and opportunity to leave my job behind, and I've never looked back since. Since then, I've made so many mistakes in the crypto market, and I'm here to share with you the successes that have been learned from those mistakes. And boy, do I ever have a treat for you today. I'm going to show you one of my favorite and most profitable trading strategies that I've been using, developing, and fine-tuning for the past 3 years now. And this is one of the strategies that you need to add to your repertoire of skills so you can increase the amount of high probability trades that you take. Once you see it, you're gonna say to yourself, why did I never learn this before? So join me, guys. Let's get right into this strategy and see how it works. Bitcoin on the 2-day chart reaches the all-time high 2017 resistance. Is it going to break it? Zooming into a lower time frame, we see that the price action is going crazy. A bit of rejection here. Is it going to break it? So much activity there. There's a little bit of resistance. It's smashing it. And look at that rally. Ethereum Classic is one of the most bullish coins that we've seen this year so far. And right now we see a possible ascending triangle and a breakout potential. Is it going to break to the upside here? An ascending triangle is a high probability play as it keeps conforming right now. We see that it's going. What just happened? What just happened? Luna Classic has been conforming in this channel now for the past 12 hours. There's a chance to break to the upside, but will it actually break? If it doesn't break, there's a chance to short it at the lower trend line. What's gonna happen? Is it gonna go up? It's getting rejected right now. It's getting rejected. The price action is getting crazy. The bears are starting to take control. If it breaks at this lower trend line, we're gonna short it and take some huge profits. It's going, it's hitting, it broke. I just caught it right there. We're going to cover 5 things today. 1, the ascending triangle. 2, the descending triangle. 3, the symmetric triangle. And 4, the trendline breakout. And then 5, I'm going to show you 2 trades that I took last night and today for a profit of $3,500 following these simple rules of mine. I'm going to give you a great introduction that covers these 4 things. If you're interested in learning more on an advanced level, definitely visit philakone.com. Consider joining my premium Discord trading group and also check out the course version 2.0. That's 29 hours of lectures over 53 hours, and that combines all of my 7 years of experience. So jumping right into it, what we see here is the ascending triangle, the descending triangle, and the symmetric triangle. All of these things have 2 common things: a support and a resistance that's meeting somewhere called an apex. For example, on the ascending triangle, you're going to see the resistance hammer at the top, whereas on the descending triangle, you're going to see the resistance hammer on the bottom. For a symmetric triangle, you will see the resistance and the support that's actually sloped. So for the symmetric triangle, you're usually going to get some shape similar to this. It could be more sloped up, it could be more sloped down, but eventually it meets at a point where you can make a decision on what you would like to do. For the descending triangle, you see that, or for the ascending triangle, you see that it's getting higher lows, but the highs are the same. So eventually at this apex, it could break up or down. For the symmetric triangle, same thing. It could break up or down. For the descending triangle, same thing as well. When it gets to the end of the apex here, it has an opportunity for you to take a trade. Now, it doesn't always guarantee that these trades will be successful, but from my experience, it's a good setup to see and take the risk on it. Without any risk, you're not going to have the potential to profit. So you got to make that decision. And everybody takes different types of trades. You might wait for a confirmation. I may not. So let's talk about the different ways of confirmation, okay? I'm going to explain it really easily so we can all understand on the most basic way, the 3 things that we can basically do for a breakout. And the choice is yours because your tolerance for risk is going to be different than my tolerance for risk. I might take more risk in terms of a breakout than you may take, for example. Okay, so it's up to you how you want to do it. So let's just say that there's a ascending triangle and the price is going to the upside like that. So we see that the resistance is up here and we see that the support is down over here. Once it gets closer to the end here, I would not recommend it on 1 or 2 points, probably the 3rd, the 4th, the 5th. That's where I'd be more interested. So as it breaks out, okay, let's assume that it's going to break out. You can do one of 2 things. 1, you can buy it on the breakout itself. 2, you can buy it when it breaks out and then it comes back to retest these key levels over here. So for example, it breaks out and then comes down and then it goes back up there. So you would be buying it on a retest. And the 3rd one that you can do is buying it on the next breakout above the previous high. So these are 3 things that you can choose to do. I personally like to wait near an end and I buy it on the breakout. And then if this is what I do, I put my stop loss below the support line to make sure that I'm giving it ample room to break to the upside. Does that make sense? If you have any questions, just leave your comments below and I'll be more than happy to reply to you. I check them often on Twitter and especially on YouTube as well. So if you are playing on the breakout here, okay, a few things can happen on the breakout. It can keep going. That's 1. And the second thing that can happen is it can fail, right? That's not good. And the 3rd thing that can happen is it comes back to the downside, it retests, and then it breaks to the upside. So if you were to put your stop loss here, for example, slightly below the resistance on a breakout that you're buying, what this allows you to do is if scenario 1 happens where it just keeps going and going and going and it doesn't stop, then you won because your stop loss is below the trend line there. In scenario number 2, what can happen is it doesn't keep going. In fact, it comes to the downside, it retests the support, it bounces, and then it continues to the upside. In scenario number 2, you also won because your stop is at a good place. But in scenario 3, instead of bouncing or going to the upside and continuing, it actually ends up failing, okay? And then you're going to take a loss here. So if you think of the possible ways to play a breakout, ensuring a good stop loss below the previous resistance, that's now a support. This is going to allow you ample space to let the trade come to fruition. And it protects you against 1, the rally that keeps going, right? You won that trade. And 2, it protects you from stopping yourself out in case it ends up retesting that resistance. So whenever you see these ascending triangles occur, it's in your best interest to make a decision on what you want to do, okay? But this is only if it breaks out. You have to make sure you're watching the basic things like price action and RSI and MACD and volume to see how it's trending. Although if this breaks out, this is a killer strategy that I often use that I'm going to show you in the next few minutes. And then for the descending triangle, it works the exact same way, but opposite. So you have a descending triangle just like this. Okay, this is scenario number 2 now. Scenario number 2 goes like that. So then it's hammering at it, hammering, and then eventually it breaks down to the downside, right? So let's just say it breaks somewhere right here. So as it breaks to the downside here for the descending triangle, you can decide to enter here if you want. But if you enter right there, you got to make sure that you allow yourself ample room above that previous support that's now a resistance, give yourself a good stop loss there. But if it keeps going, right, if it keeps breaking and it keeps going, you won the trade successfully and you did it well. Number two, it goes down and then it bounces back up to retest the resistance and then it continues back to the downside. So you won that trade. So, but if scenario 3 happens where it was a fake out and now the bears are trapped and it goes back out, you stop yourself out. So once again, the best way to trade these breakouts, in my opinion, is to make the decision about what type of trader you are and want to be, and especially how much risk you're willing to take on. Do you want to take on this breakout and enter right there, right? Entering right there? Do you want to wait for a retest, right? And then basically entering on a retest if it's successful? Or do you want to wait for a retest and a breakout to the downside where you would be entering it right here? So these vary based on how much confirmation you're looking for and needing to enter a trade. The third way is always the safer way because you not only got a retest, but you also got a break to the downside, okay? And the symmetric triangle works the exact same way as well. And now the last thing that I'm going to talk about is going to be the trendline breakout, okay? The trendline breakout goes something like this. You got a coin, okay? And let's just say it's hovering like this for a while now, okay? Every time it hits there, there's a chance for you to break out. You would be watching things like MACD, watching things like RSI, volume, price action to see how it's trending. Once it breaks out, you're able to see it. If it coincides with a 55 EMA, that's even better. A 55 EMA, for example, just going something like that. So if the trend line is, for example, following the path of a 55 EMA, and there's a trend line there as well, the break of the trend line and the break of the 55 EMA is going to be your signal to enter the trade. So once you enter this trade here, you got a few things that you can do, okay? So if it breaks to the upside, you can enter it right here on the breakout. On the breakout right here, okay? Or you can perhaps wait for a little dip, okay? Wait for a little dip. It might even retest the trend line here. It might even just get a small retracement there. So you can make a decision if you want to buy it on the dip or not, okay? Or a retest. That's up to you. That's a second way. And the third way is to wait for an official breakout above the previous high. So if it breaks above this high right here, then you're able to confirm that the trend is now continuing. So that's strategy number 3. And the same thing goes with a short position as well. If these situations were reversed, okay? If these situations were reversed, well, you can do the exact same thing as well to the downside. So to give you a clear example, if, for example, this doesn't happen as often as you think though. So you're getting a price that's just hovering like that on a support instead of resistance. On the break to the downside, okay, you can make a decision to short it on the breakdown right here. You can decide to retest it. This is a good one. This one I like to do a lot when it happens, but it rarely happens in my opinion, because then it would imply that it's now starting to parabolically go to the downside, and that's not good. So that's your second one, a retest. If that happens, great. And the third one is the price continues to the downside and you enter it on the breakout right here when it breaks that particular low. So these are some of my absolute favorite strategies that I use. This is one trade that I took yesterday for Bitcoin, for Ethereum Classic for $2,013. And the second trade that I took was for Luna Classic for $1,333 profit. So that's a total of $3,300 of profit that I made. And these were really quick trades because they were all breakouts. So let's give you now a really clear-cut example of how we can use these in a real life situation. Yesterday for ETC, this was the trade that I took for $2,000 in literally 9 seconds, okay? we saw this right here, and using the bar replay feature, I just saw it conforming like this, and I believe that it was an ascending triangle in the making, like that. Doesn't that look like an ascending triangle? Some of these regions are bull-trapped regions to the upside. So I literally just took a chance. I was on a low time frame, okay? And then as you bar replay it, let's see what it does here. So you can see it very clearly. So now it's getting rejection, it's going up, and it literally just spiked up. And I believe that was the moment that I entered the trade. And then you can see what happens next right away. It's still going, and boom. And this was in a 1 minute candle that did about 6.74%. So that's the prime example of how to trade these breakouts. It's reaching the end of the apex, and then once it gets close to there, you can make a decision based off of those three things, what to do. Or you can do number 4, which is do nothing at all. So the next trade that I took yesterday, actually today, this afternoon, was Luna. So Luna ended up conforming into a channel for a pretty long period of time. You can see this channel forming right here. Okay, so this channel here, I'm going to bar replay it. I saw it rejecting around 10 in the morning. Okay, this is on a higher time frame, the 15 minute. But once channels are created, what I love to do is short these trend lines down over here. If they break, it's going to yield you a really good scalping profit. That's also a high probability trade setup as well. You want to focus on these high probability trade setups because they can yield immense rewards and you really don't have that much risk in terms of it failing. Of course, there's always risk to fail a trade, but in my opinion, once it gets to these particular resistances or supports, something can happen. And when it does happen, the probability of winning is quite high. So I saw this happening right here. I saw that rejected, and then it started to come to the downside like that, okay? So on the break to the downside, that's where I shorted it. I caught it a little bit later. I didn't enter it right away. But if you take a look right here, this is where I entered it when there was a little bit more confirmation, and I was a little bit busy at that time, but you'll see how it trends. It goes to the downside, and it's going to break, but I didn't enter it quite there. I entered it on the retest almost, right around there. Because I saw it rejecting. It's not going back in, it's rejecting. And that's where I entered it, and that's how I was able to make this type of $1,300 profit in about 1 minute and 13 seconds. And then you can see the rest, it's just history over here. So this was a good scalp. And this right here ended up dropping about 8%. Now, mind you, to be quite honest, I did play $100,000 for both of these positions. Now, don't believe for a moment that you need to have a big bankroll to make good profit. The key thing to remember and take away from playing small positions is that you have to earn the right to play big and build your account slowly. When back in my days, I used to get 1 to 3% per day, and it took me a long period of time to build that capital and balance so I can play larger positions. 1% at a time, or 3% or 5%, depending on if you're a day trader, a swing trader, or a scalper, they really start to add up in time. I think that the position sizes that you play are directly proportional to your skill set and how good you're getting in general. You don't want to be given $1 million as a newer trader to just do whatever you want. You can see how quickly that's going to evaporate, right? But if you give a more experienced trader a little bit of capital, they're probably going to do a lot better than somebody not experienced in the market. So don't be discouraged by my position size for that profit that I've earned. It's because I have the experience. I've been in crypto for 7 years, and I highly encourage you to take that risk to learn, develop your skill set, and never stop believing in yourself. Because eventually, if you put in that hard work more than other people do, if you grind, if you hustle, if you're motivated to learn, improve your skills, and do something with crypto, I can assure you that the guy who worked harder, like the guy who's working a lot harder than the guy who's not working at all, you're probably going to have a much higher chance of attaining success than him. So I just wanted to share with you guys my quick experiences in a short video to show you what kind of setups are my favorites. I hope that you've enjoyed this video. If you like it, please make sure you're hitting the like, the subscribe, and the notification button. And right now, I hope to see a lot of you guys join me for my premium Discord trading group where there's a 7-day trial. If you're interested in my course version 2.0 to really invest in yourself and take it to another level of trading, to learn from me, somebody who's been in crypto for 7 years now and does it pretty well, I'd be more than happy to take you on as one of my students. So thank you very much for joining me, and I will see you next time. Bye now.